So I think recent events have had a massive impact on this industry, and in most of the mature markets, public trust is probably at an all-time low. After the global financial crisis, scandal after scandal around different malpractice going on, and people are really looking for fresh approaches. And for me, I think that's an opportunity for fintech firms to really take the opportunity to transform the industry by bringing new ways to solve old problems. I think there are some real disruptors out there gaining pace. Look at peer-to-peer platforms, crowdfunding and digital currencies. Kickstarter, for me, is a really potent example of crowdfunding, obviously. This should be seen as a huge threat to traditional capital markets. Star Citizen is a video game that's raised over $80 million and got listed in the Guinness Book of Records when that figure was just over 65 million back in December 2014. What's particularly worth noting about this example is that they only set out to raise $500,000. So how many banks would voluntarily lend 160 times what the borrower was originally asking for? So at the same time, as we well know, the banks are under huge resource constraint from a financial and human capital perspective due to the need to meet regulators' requirements. Not only does capital adequacy mean less in the pot to lend out, but there is much work to be done for MiFID II, Dodd-Frank, Basel III, FATCA, MAR, the list goes on. And so the availability of the resources that you need to be able to innovate has shrunk massively. So much has been talked about the adoption of new technology, and indeed there's been a fair level of uptake with mobile, cloud and big data. You would struggle to find any serious participant in the financial services industry that has not taken their services mobile to cater for the dynamics of the workplace and their customers. FinTech firms have clearly played a huge part in this. Cloud has largely been about elastic computing capability, but I think the next wave of adoption will be much more integrated, with higher levels of collaboration between fintech firms, their customers, and other service providers. As our ability to dissect and derive meaning from ever-increasing quantities of information evolves, big data is close to the heart of fueling innovation too, and very much closely linked to the capabilities afforded by cloud computing as it becomes ubiquitous. However, this is only part way to a new world where the fundamental cost model shifts alongside the ability to be more agile. These two things in tandem are key to freeing up the room to innovate. So certainly in my time in the banks, there was a bias towards doing things in-house. This made sense when the power of computing was all about Moore's law and doing more in less time. Today, technology innovation is about connectivity, availability, reaching more customers and giving out smarter information to aid decision making. It's tending towards enhancing the end user experience by creating more value add in your products. Core computing capability itself yields little competitive advantage. In recent times, focusing on regulation combined with a much higher level of investment required in traditional terms to earn $1 of profit means innovation needs to be about smartness in process, recognizing and seeking out alternative ways of doing things. In some cases, that will be sourcing those capabilities externally where it makes sense. Also, breaking out of the proprietary model is key, and seeking out opportunities for industry collaboration to solve problems together, sometimes involving regulatory bodies themselves, naturally leads to efficiency and standardization in approach. I guess what I'm saying is that competitive advantage is to be found elsewhere. So of course all of this means opportunity for fintech firms. Incubating new thought in solutions to old problems with fresh thinking is key to the paradigm shift required in the financial markets industry. But the challenge is being able to achieve scale and credibility with their customers who are likely afraid of attracting further regulatory scrutiny. So one answer to these issues is bridging the gap by working with a trusted party to provide certainty around core elements of delivering new fintech, de-risking adoption to some extent. For example, Thomson Reuters Electron Managed Services provides a globally scalable delivery environment for provision of hosted content, including the market-leading consolidated financial markets data feed and low-latency news, married up with the ability to host solutions for our customers, including the industry-standard Thomson Reuters Enterprise Platform, or TREP, for managing and disseminating that content. For FinTech firms, the ability to both consume from the Thomson Reuters data cloud as well as be hosted alongside our enterprise platform provides an easy route to scaling globally and serving the needs of financial markets firms, many of whom are already enjoying the cost model benefits of using a managed service to swap CapEx for OpEx and then benefiting from a global footprint for agility. Together with our long-established partner program and third-party developer community, Thomson Reuters can really help FinTech firms to benefit from this trend in financial technology innovation. As more FinTech firms come into the hosted environment, we're seeing huge opportunities for the emergence of financial markets ecosystems with a multitude of services that plug together to run businesses for our customers.